think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper, and we talk all things macro and how these geopolitics and macro environments affect our investments, our money, our freedom, all those different things. And so today I'm going to welcome back Rick Rule. Rick Rule, how are you doing today?
I'm fine, and I'm happy to be invited back on your show, Daryl. I enjoyed the last time.
Yeah, I appreciate you coming on. You came on my show when it was a baby. I mean, I guess it's still a baby in a way, but I've grown, my subscribers grown quite a bit, in comparison to where they were last time. And I just appreciate you just taking the time out, just even, as a small channel, just seeing like the value and just providing knowledge to the people, to even come on.
The truth is that, and we discussed this last time, when I was a young man, so many people helped me. I was blessed to have so many mentors. And the idea that I wouldn't help somebody grow a well-meaning small channel, if that was my decision, would, I think, demean my debt of gratitude to all the people that helped me when I was a youngster? Because believe me, there was a lot of them. And I didn't come close to doing whatever I did on my own.
Yeah, that's good to hear, and it just speaks of your humility. I mean, especially when I have Jim Rogers, he always just tells me like, "Hey, man, just invite me back. I want to help you and stuff." And so, like, I just really appreciate the humble nature that comes with wealth and everything. And could you speak to that? Like, just, I mean, because there's a lot of egos out there. When you get money, you think you know everything. You cashed out on Bitcoin, you think you know everything. I know you got some wisdom in terms of humility and wealth.
Well, Daryl, I've earned my humility. I talk a lot about the things I've done right, and I don't talk too much about the things I've done wrong. But believe me, there's a lot of both. The other thing is that there's a whole bunch of facets that go into making a person. And having worked hard and been smart and got lucky and made some money, that's all a good thing. But it isn't everything. There's other forms of wealth. There's respect in the community. There's a sense of well-being. There's a sense of existing in a community that respects and welcomes you enough that you're safe in it. There's a whole bunch of kinds of wealth that don't have anything to do with how much tax you've had to pay or what you have in the bank. You mentioned Jimmy Rogers. Jimmy was very helpful to me when I was in my 30s. And I remember talking to him, and Jimmy shared with me that when he was a young boy, he grew up in Mississippi Delta, I think in Thermopolis, or maybe across the border in Alabama. But I remember him telling me when he grew up, his phone number was 5.
Yeah.
And if you think about that trajectory, coming up in the northern part of the Cotton Belt, being from a town where your phone number is 5, going to be George Soros' partner and screaming into 4 or 5 phones simultaneously on Wall Street, that's quite a trajectory. And you can learn a lot from a person like that isn't just about money. One of the things that I learned from watching Jimmy Rogers, he's a disarming public speaker. And his technique is, if he doesn't know the answer to something, say, "I don't know." That's very useful. But he also speaks slowly, hasn't forgotten his Southern roots, and he smiles. And, you have so many of these Wall Street guys, and you look at them on TV, and they look miserable. And you just don't want to listen to these guys. I mean, it might be that whatever they say is true, but you don't want to end up with somebody who's projecting hostility to the world. And I think that's Jimmy's message. It's the humility that you talk about. It's the fact that he wants to address people where they live, who they are. And I seek to emulate that.
Yeah. Him and I had a discussion, me being from Oklahoma, and he said he lived in Oklahoma at one point, and I think it was Hugo or something. And so, we talked about that, and just like, and just how to change our mentalities. How did he change his mentality to go out and like see the world or whatnot, being from a small town? and everything. So that was really powerful. So just to change topic, so you talked about the Russian stocks. I kind of went in with I mean, when those stocks took that big haircut, I went in. I was like, okay, Rick Rule says to be bold, be courageous whenever there's turmoil. You got the crisis investing. Jim Rogers talks about that. So I went in and started buying a lot of them. And obviously we can't see the price. I haven't been able to see the price on like Gazprom and stuff. I don't think they're trading. I don't know what's happening with them. But Luke Oil, I mean, just looking at the price of it, I mean, it's at like 60 something dollars when you convert the rubles into dollars from what I'm looking at. So we can't cash out though. We can't, I don't know. I don't know if Rick wants to cash out or you want to hold for the dividends. Will we ever get paid our dividends or what?
Well, obviously those stocks were cheap for a reason. Dialing your audience back, because maybe they don't know the backstory. The Russian natural resource stocks were the cheapest stocks in the world. And when the conflict began, they fell by half. And I sort of decided, in fairness, not with more money than I could afford to lose, that I had to take a punt on that. There have been times in my life when speculating in political turmoil, Peru after the Shining Path was put on the path, or Congo during the Civil War, where investing in circumstances like that paid well. Thus far, my latest Russian speculation gives me more cause for humility. I bought some stocks that promptly got delisted from the London Stock Exchange, so I could neither buy more nor sell what I had. Adding insult to injury, the Russian companies no longer have access to the SWIFT banking system, and rubles are no longer convertible in dollars. So to the extent that the Russian companies wanted to pay me dividends, they would have to pay me rubles. And then I couldn't convert the rubles into dollars. And I don't know of any depository in the United States that accepts rubles. My understanding, and you have to laugh about this, the alternative is crying, which is not polite to do online. The alternative to that, which I understand that the Russian companies are exploring, is to set up a dividend reinvestment plan for foreign holders so that holders can have their shares converted to additional shares at market. The other alternative, which the Russian companies are also exploring, is to set up a facility where you can take delivery of your over-the-counter Russian stocks or your London-listed Russian stocks and convert them back into ordinary shares, which trade on Moscow. In order for that to be efficient, you have to have a Dutch account or a Swiss account, and I have neither. So my only current hope is that those shares get converted back to ordinary shares. The greater hope, of course, is that the big thinkers arrange some exit from this horrific conflict. And over time, some sense of normalcy appears both in Ukraine and also in Russia's relationship with the world. But that's probably asking too much in the near term.
Yeah. I just read an article with the EU working to ban Russian oil, and just reading that, I feel like that exacerbates the energy crisis, even more, especially in those areas. And we did see that Russia came out and they halted the natural gas to Poland and Bulgaria and stuff. And I did a video on that, but I was kind of talking about, like, I remember as a kid, like, if my parents couldn't afford to pay the bill, you get your lights cut off and stuff. And it just literally just reminded me, of that. And unfortunately, a lot of people need that energy. They need that electricity to be able to heat their homes, cool their homes and such. So how do you see this continuously, escalating and how this may play out?
Well, you made so many big points there. At least three. I'm going to have to tax my memory and go back and do them all. The first is ultimately that you do have to pay your bills. If you're a government, you don't have to pay your bills for a while, But at some point in time, faith in your willingness and ability to pay gets in the way. In the case of your circumstance growing up, one family, they could cut you off without too many repercussions. If you have a nuclear armed creditor, it's very different than having a family in Oklahoma to deal with. You could say no, and they'd send the police. And if worse came to worse, you'd become a guest of the state, which is to say you'd be incarcerated. But a family, a government, that's a very different circumstance. And I think that people in particular who buy government bonds need to understand ultimately that they are lending money to an entity that will ultimately defend its interest with a gun. Your recourse is their willingness to pay. And as long as everything is good, everything is good. And when everything isn't so good, you get stiffed because you don't have any recourse against the state. It's important to know that. The other point that you brought up, which is unrelated to that point, is the fact that natural resources are a truly global business. And we've seen, in terms of the geopolitics of natural resources, this circumstance, which is to say a disruption in the supply chain, disrupting world events many times. An example would be the Arab oil embargo, where the Arab states got angered by the pro-Israel position evidenced by Great Britain, France, and the United States in 1973, and for a while disrupted the flow of oil and gas from the Middle East to the West. An amazing, amazing shock took the price of oil from something like $5 a barrel to $30 a barrel over time. Other circumstances in history that are reminiscent of what we're seeing today were, as an example, the American natural resource grab in the 1950s, where part of the efforts of the State Department was to assist American companies in accessing natural resources on a worldwide basis, our own having been somewhat depleted by the Depression and World War II. And there was active American foreign policy to secure foreign resource relationships going back to the 1950s, when Japan needed to emulate that in the 1970s. The incursion of Japanese buyers into the market was one of the things that led to the run-up in natural resource prices in the 1970s. What you're seeing now with China, as an example, is an absolute replay of what we're first the United States, then the European Union, then the Japanese did. And we're seeing circumstances where the basic ascent of humankind, which is to say the increase in material living standards among the poorest half of citizenry worldwide, has meant that increasingly blocks of citizens, blocks of people who, because of the poverty of their countries, have been frozen out of the global resource trade, are coming into the global resource trade and, of course, reshaping it. 20 years ago, 30 years ago, you and I wouldn't be having this discussion. We had the good fortune to live in the United States, which was one of the few countries in the world that was rich enough to sustain the standard of living that we enjoy today. Mercifully, the bottom half of humanity, while often still desperately poor, have become rapidly more materially wealthy. They want the same standard of living that you and I enjoy. Increasingly, they're able to pay for it. And you're seeing these dislocations with groups of people who couldn't formerly compete, now competing with us. And I think some of what you're seeing in the replay of the shutdown of Russian supplies to the West is simply a realization of the fact that as the poorest half of humanity becomes materially more wealthy, the competition for raw materials, the competition for food, the competition for energy, the competition for minerals will become more intense.
Okay, so what I'm looking at now is like the OPEC. I did a video on OPEC and them not wanting to produce more oil. They said that it'll cost them. I think it'll be more expensive to make the oil price go up. And then just looking at the countries in OPEC, it looks like a lot of those countries are not very friendly with the United States, and we're seeing some things heat up with Saudi Arabia, the prince over there, and some things he has to say about Biden and such. And so I just foresee this energy crisis to get even worse.
I agree with you. I would note first that in terms of energy, the United States is not very friendly with the United States. We talk about the fact that other people ought to produce more oil, and then we put restrictions in place against producing our own oil. President Biden himself has restricted the oil industry's access dramatically to drill for oil and gas in the United States. The administration has also turned down the expansion of the Keystone Pipeline, which could bring us 1.8 million barrels of Canadian oil a day into the US market. So the president is somewhat disingenuous. The president has suggested that other people should solve an energy crisis that we are well within our own means to solve. Politically, it's difficult for him. A lot of his funding base is very anti-energy. So the campaign contributions come to some extent from the green community, but the people, the folks that he wants to have vote for him, would prefer to be able to afford gasoline. So he's in this strange position where he has to say things. Well, he's a politician. He has to tell lies to the voters, at the same time that he tries to pacify the people who provide money for his campaign. It is true that the global oil industry, including both the Americans and the Saudis, have underinvested in productive capacity for the last 3 years. We talked about that in our last interview. At that point in time, the oil and gas industry on a global basis was deferring sustaining and project expenditures at the rate of about $3 billion a day. That's a very big number over time. And the consequence of deferring those sustaining capital investments is that you begin to impact rather dramatically your ability to produce. So for the Saudis to kick up their production, they would have to spend a lot of money, a lot of money. It's not like they could turn a gate valve to the right and have more oil come out. There's all kinds of expenditure they would have to do. And incurring those expenditures in an effort to lower the price seems rather stupid. It's as though President Biden said to you, Mr. Thomas, what I'd like you to do is increase the amount of work you do by a third, and in return for which I will lower your income by a quarter. That's what Biden asked the Saudis to do. The fact that the Saudis parenthetically showed President Biden their middle finger isn't really surprising when you consider the ask. I'm not trying to say that the Saudis are or should be as friendly with the United States as they've been in the past, but the truth is the ask, which is to say, spend hundreds of billions of dollars, which, by the way, we won't spend in our country, and then do it with a view to lowering the price you get paid for your product. How much sense does that make to you?
That makes no sense at all.
So you can imagine the Saudi response. I'm not defending some aspects of Saudi policy, by the way. I'm just suggesting that spending tens of billions of dollars to lower your income is a fairly odd request.
Yeah, that's really good information. So transitioning to the uranium. I know. So I went to your boot camp.
Thank you.
Thank you. That was a lot of information. I got to watch it again before it disappeared.
Mm-hmm.
I think we got to September or something like that. But yeah, so the sentiment seems to be changing at a faster pace. I'm starting to see more mainstream articles coming out talking about nuclear energy, but I'm also seeing like from people that may be uninformed or have misinformation about uranium or still talking about the propaganda that they were fed like, decades ago or whatnot. I'm still seeing a lot of pushback from them. And so I was kind of wondering, just, is this going to be a bloody transition, to nuclear with how much misinformation is out there and how many people that are uninformed, and it just seems like it's going to be not a pretty transition.
I think the winds of change are blowing pretty directly for uranium now. Yes, there's going to be pushback. Yes, when people who aren't engineers, which is to say most of humankind, look at the uranium business, they often respond emotionally. They don't think about flipping a switch and having the light go on, which they want. They think about Hiroshima, 3 Mile Island, Chernobyl, Fukushima. They neglect the fact that conventional energy production, oil and gas, coal, hydroelectric, natural gas explosions, kill many, many more people worldwide in a year than have died in the history of the nuclear power industry. That doesn't include Hiroshima and Nagasaki, of course. And they forget, too, that hundreds of thousands of people worldwide today die of energy poverty, not having access to electricity or having unaffordable access to electricity. And on the next level, the government of the People's Republic of China has acknowledged that 500,000 Chinese people a year die of airborne particulate pollution from things like coal burning and oil and gas burning. The truth is that the world needs more energy of all forms. And there's a consensus in the world, it would seem, that we need to reduce the amount of carbon loading in the air and the water. The best form of baseload energy worldwide to do that is nuclear. And even some elements of the green community are willing to accept that. When I speak in front of anti-nuclear audiences, which, by the way, I'm trying to do more of, and not because I'm a masochist, but rather because I think that if you disagree with people, you should be talking peacefully among yourselves. When I get in front of these groups, there are some facts that are inconvenient for some of them to remember. One fact is this: 1.2 billion people worldwide have no access to electricity at all. So try and imagine your life with no access to electricity. Another 2 billion people in the world have access to intermittent or unaffordable electricity. The world needs more electricity. The world needs more power. Now, some of the big thinkers would say the world needs fewer people. You'll recall that maybe 500 of those big thinkers flew to Davos on private planes to tell you and I that we ought to drive less, But I'm just, when I look at the fact there's almost 8 billion people on Earth, and one of our greatest collective achievements over the last 35 years has been the real increase in living standards that we have been able to afford the poorest half of humanity. When the poorest half of humanity gets more spending power, the stuff they buy naturally is material because they're materially poor. We need to provide electricity for 1.2 billion people, and we need to increase the efficiency and the affordability of it for another 2 billion people. And in order to do that with the technologies that exist today, we're going to have to incorporate nuclear. Are we going to incorporate solar? Of course. Wind? Of course. Hydro? Of course. But the ascent of humankind requires nuclear power now.
Yeah, my bad. I thought you were about to say something. I'll just be captivated. You say stuff, and I just it just sucks me in. It's amazing. So Russia does a lot of the is it refining?
Enrichment and fabrication. Yes, they do. About 40% of world's enrichment capacity is Russian, which in the near term is a real problem.
Yeah. I was thinking about that, and especially at the investment boot camp when that was brought up. We had the two guys that did the PowerPoint presentation, which was very amazing, and them talking about the enrichment of uranium, and there was some talk about banning uranium from Russia Has anything else come out of that, or that just kind of went silent once they saw what would happen? Or
So far, the prohibition against Russian enrichment has been informal. There are some Western utilities that are self-sanctioning. They're refusing to buy Russian supply, probably because there's ample supply in the market without the Russians. I mean, I suspect it's a very easy political leap to make. All of us need to remember the arithmetic behind it, though. Right now, we're consuming between 220 million pounds of uranium a year, and demand is growing pretty rapidly. And we're supplying 125 million pounds, which is there's a shortfall every year of 75 million pounds. 12 or 15% of that is made up of re-enrichment, and the rest is above ground inventories. We're running down above ground inventories very, very, very quickly. Among other things, the Sprott Physical Uranium Trust has, I think, bought 55 million pounds and taken them off the market. So the longer that you go consuming 75 million pounds a year more than you produce, the more critical the marginal supply from enrichment becomes. The question will be, I guess the first question can be, how can normalcy return? How can the war end? The second question, if you don't know the answer to the first, and I certainly don't, is how can you permit, finance, and build enrichment and fuel rod fabrication facilities outside Russia fast enough that you can outrun the supply shortage that faces us? Having asked that question, Daryl, I have to admit I have no earthly idea about the answer.
Yeah, so we're seeing, like, and even within that, like, so we have this supply demand issue and a lot of other geopolitics around uranium. Right now, the markets have been taking a good dive, especially the tech sector. And I know you don't really get into tech or whatnot. So I've seen the tech sector just get demolished. I mean, Netflix, all these other companies. But uranium has been holding up pretty good, but we know that uranium is very volatile, and we're seeing that uranium stocks are looking a little bit cheaper now compared to where they were about a month ago or so. So would you say any time is a good time to buy, or would you say now is like you should go in and consume or accumulate?
I would ask speculators to invest a little bit of their time to build knowledge in uranium before they buy. And I would ask investors too to limit their first purchases to higher quality and lower risk uranium names. It's a little illusory to compare the tech sector with the uranium sector for two reasons. The tech sector is extremely complex. I would suggest to you that the uranium business is small enough that if you spend 50, 60, 70 hours, you can understand it well enough to invest. I've been trying to understand the tech sector for 40 years, and I still can't pronounce, let alone spell, many of those businesses. So I stay out of tech into things that are simple. The other thing about uranium relative to tech is it's extremely small. The uranium business relative to the tech business is sort of a, it's a pimple on an elephant's behind. It doesn't matter in the course of things. It matters to people who listen to you and I because we're attracted to real assets and basic industries. Your risk in the uranium sector, I would suggest, comes down to three things. Your own lack of knowledge as an investor. That's something that you can address and should address, The second would be a global economic slowdown, a recession or a depression. There is no doubt that we're going to have supply shortfalls, and absent a demand shortfall, the uranium price will continue to do better and better and better. But a global recession or a global depression could halt the advance of uranium in its tracks. The third risk you have, improbable, would be a safety replay. another Chernobyl, another 3 Mile Island, another Fukushima. If that happened, then all of the progress that the nuclear power industry has made, convincing the voters and the powers that be that nuclear power is an important part of the world's energy mix, would be lost for 10 years. And 10 years, if you're long, is a very long time.
Yeah, those are some important risks to consider. And that's kind of been like a lot of my, well, I wouldn't say hesitancy. I still hold my shares. I've still been accumulating, but I've also been a lot more cautious because we have been seeing just, I feel like we have been seeing like slow down liquidity kind of drying up, the Fed coming out, being a lot more hawkish, talking about tightening and also raising interest rates, even though it's not as much. And a lot of people, like, this is kind of where I get into the centrist mindset, where it's like, okay, well, they have to, start quantitative easing again because they're going to get a lot of pushback and such. And the governments, the politicians want to fund a lot of things. And so the Fed is going to have to start printing money again, essentially. But however, it's like, when is that going to happen? And I guess historically they've tightened to the point where something breaks, and then before they reverse course. So I'm kind of just trying to figure out, what should I be doing right now, Rick? I need your help.
Well, a couple things. I don't know if you acted after our first discussion. The uranium juniors in particular were a third of current levels. And you can afford a little drawdown if you've got a 300% increase in price. In fact, there are points of time when the uranium market gets absolutely giddy, and you'd be silly not to sell a little during times like that. It's an extremely volatile market, and disciplining yourself to make volatility your friend, which is to say, when you see huge upside spikes that reinforce your confidence, ironically, when you get more confidence, you got to sell. And when you see these dramatic downdrafts, and everybody is just sort of puking out their uranium stocks, you got to buy. The other thing about uranium is that many, particularly of the younger people who are attracted to the uranium narrative, aren't able to allocate enough capital to it because it is risky and volatile to do the study that's required. And for those people, I think you have to keep it simple. I think you probably have to buy the Physical Uranium Trust offered up by my former employer, Sprott, the Sprott Physical Uranium Trust. And you probably buy one ETF. My preference, of course, would be the Sprott Uranium ETF. I keep it in the family, although I don't work there anymore. I'm still the largest shareholder. If you're investing $5,000, $10,000, $20,000, the idea that you're going to spend 50 or 100 hours researching the sector probably counterproductive. You could do something else with that 100 hours to make some money. And you keep it simple, just buy the whole waterfront. If you're investing larger sums of money, then the first thing that you got to invest is your time and treasure. The different part of your statement, which is in regards to your macro call, I think you're right on. I think you nailed it. I think the Fed is allowing interest rates to go up as rapidly as they can, knowing that they needed to lower them again. And you can't lower them from zero, you can't do that. And I think they're doing exactly what they should be doing, letting the interest rate run. I think, too, that to the extent that they can reduce quantitative easing, it's a good thing. You may remember in our first interview, we talked about quantitative easing. That's a real fancy political term for counterfeiting. These guys are printing up fake money. It's difficult to conceive of this, but 35% of all the US dollars in circulation have come into circulation in the last 30 months. In 2.5 years, we've printed over a third of all the currency in circulation since the founding of the United States of America. Now, we didn't do it to accommodate the needs of an economy that had grown by 35% in 3 years. The economy shrank. This is a straight up counterfeiting. And to the extent that they do less of it, I mean, less counterfeiting is a very good thing. If counterfeiting was such a good thing, they'd call you up and they say, Mr. Thomas, we want you to print money levels. Okay. We want you to print your own currency and distribute it in the neighborhood and stuff like that. They don't do that. If you did that, they'd throw you in jail. Now, if you were Congressman Thomas, that would be very different. You know, you could vote for quantitative easing, it'd be policy. You'd be hugely popular and be reelected. But if you look at the logical conclusion of all this, one wonders about the sustainability of their newfound prudence. If you look back over 30, 40 years, the US 10-year Treasury, as an example, has had a positive yield after inflation. Now, the government themselves, not some cranky old libertarian named Rick Rule, says that inflation is going up by 8.5% a year at the consumer level, 9% at the producer level. So the US 10-year Treasury pays you 3% now in a currency where the purchasing power is declining by 8.5%. In other words, they're guaranteeing that you're losing, what, 5.5%? If you return those yields to normalized levels, the 10-year Treasury would be yielding 9. Imagine the impact on the federal budget if their interest charge tripled. Imagine the impact on the budget of the state of Washington or the city of Seattle if the interest rate they paid tripled. Even more amusing, I use that word advisedly, over 40 years, the 30-year fixed mortgage rate has traded higher than the 10-year Treasury rate. So imagine if the yield on the 30-year fixed mortgage rate was up at 9.5%. Imagine what that would do to housing affordability. Imagine how the voters would feel about a return to reality. They wouldn't like it. And so my suspicion is that there's scope for eliminating counterfeiting, and their scope for allowing a free market to resume in interest rates, their scope for reducing the federal deficit, which is to say, restraining spending, is very limited. And I'm being generous when I say very limited. These politicians get elected by stealing money from one sector of society and distributing it to an organized sector of society. That's what they do for a living. Balancing a budget absolutely constrains their power. And without borrowing the budget, you can't deal with interest rates. You can't deal with counterfeiting, and you can't deal with the deficits. So I think your macro outlook was spot on. Do we face a reckoning in 3 months or 6 months or 12 months? I don't know. I'm not smart enough to know. But I do know, harking back to your family in Oklahoma, if you didn't pay your energy bills, at some point in time, I was taught a little poem growing up that might amuse your listeners. When your outgo exceeds your income, your upkeep becomes your downfall. And there's no way around that. There's just no way around that. And I think that we face a reckoning, maybe I hope a gradual one. I hope it's one where over time people can readjust how they live and how they feed their families and how they work. But I think you're exactly right in terms of your macro concerns and macro outlook.
Yeah, and that reckoning, includes a lot of other things. I mean, even the food crisis,
Mhm.
and inflation skyrocketing, and I believe like the ports in China, being so backlogged is probably going to cause inflation to go higher. A lot of these supply disruptions. Um, have you been paying a lot of attention to, like, well, I'm sure you have been. I mean, because I know you're very proactive in a sense of, like, being prepared, whether that's having cash, gold, real money, all those different things. But like the food crisis, I mean, now we're having, like, people come out talking about the fertilizer shortages and such. And I've been warning my audience about this for like the last 2 months. Is there any new developments that you've seen with that? Anything that Rick's been paying attention to in terms of that?
Well, two things to look at. The first is in my lifetime, which is to say over 69 years, the percentage of the average American household budget that goes to food has fallen from 30% to 15%. So yes, food prices are going up, but they're going up from an extremely low base. We need to understand that. That might be false comfort for someone younger like yourself. But food prices will go higher, and they'll go higher precisely because of the factors that we talked about earlier in the show. The 3 billion poorest people on Earth are getting less poor fairly rapidly. They would like to live the way that you live. And as they do that, demand for various things increases. Among the billion poorest people on Earth, the average daily calorie consumption is between 1,000 and 1,200. The World Health Organization suggests that a healthy number is 1,600, 1,700, 1,800. I won't tell you what I consume is not healthy. But the point is, as the poorest people on Earth become materially more secure, the first thing they do is they increase the family's calorie count to healthier levels. And increasing the calorie count from 1,200 to 1,600, 1,800 spread over a billion people means a lot more food is getting consumed. And you can't produce that much food on a global basis without agricultural chemicals. You can't do it without nitrogen. You can't do it without phosphate. You can't do it without potash. You can't do it. It's all very cute for all of us to go to some river valley here in Western Washington, where some nice long-haired young white people are doing organic gardening or something like that, where they're sort of doing kumbaya over the asparagus and all that kind of stuff. That's all great. But if you're trying to keep a place like Pakistan or Malawi from starving, you gotta kick out trillions of new calories. You have to do it. And you do that with nitrogen and phosphate and potash, not kumbaya. So, these things, absent political conflicts, of course, for wheat products, with almost a third of the world's wheat exports coming out of the Ukraine and Russia, obviously this little spat, people don't do a lot of planting in the Ukraine when folks are shooting at them. And you aren't taking a lot of nitrogen or phosphates into there right now because they're taking ammunition in there. So, that's a whole different circumstance that we're facing. But I think that food prices will begin to revert to mean. As I say, in my lifetime, food as a percentage of the average household budget has fallen by half. And I'm not trying to say it's going to double or something like that. I am saying it's been anomalously low. And that's going to begin to address itself.
Yeah, but would you say like it's been low? Would you say a contributing factor is that, over time, like the fertilizers have, grown, ingredients are changing,
Yeah.
and all those different things. Because I'm sure when you probably grew up, like they probably had more natural ingredients or something.
Well, I think that's right. And in addition to the fact that food prices have fallen by half, the work component in the food that Americans buy has grown up, which is to say, when I was a kid, we bought groceries. Now, when folks go to the store, they're buying prepared foods, they're buying solutions. So the prices have fallen even more. But what you say in terms of the supply is prescient. We had a thing in the 50s and 60s called the Green Revolution. We figured out how to develop plant strains that were more drought resistant, had higher yields, were more pest resistant. But these technologies involved many, many, many more inputs. So as an example now, if you want to know something about what grain prices might be next year, you have to pay attention to what natural gas prices are this year, because natural gas turns into ammonia, turns into nitrogenous fertilizer. And without the nitrogenous fertilizer, you don't get the yields out of these green revolution grains. The idea now, as an example, that India, which suffered chronic starvation when I was a youngster, is now self-sufficient in grain, is testimony to the wonderful impact of the Green Revolution. But the consequence of that is that, as an example, energy inputs and fertilizer inputs are critical to feeding the world now. And as there's more of us to feed, we put greater strain on the market for the inputs.
Yeah. Wow. That's very enlightening. Very enlightening. Last time you came on the show, you talked about water being a commodity, and I've
Mm-hmm.
been reading up on the Colorado River. Um,
Ooh.
and I actually thought about moving to Phoenix. All my family moved to Phoenix, and I'm like, yeah, I'm going down there next. And then I see I think it was Doomberg put out a piece about the Colorado River, and I remember you had talked about that a while ago. Um, what are you seeing like in terms of that? Like, is this like just a United States problem, or is this like a
Uh,
global problem in terms of drinking water?
that could be a whole show. Um,
Okay.
I mean, it really,
May
truly could be a whole show. First of all, water is very essential, but the price of water has always been controlled politically. We've never had a free market in water. So we've subsidized water. And if you sell something for less than the cost to produce it, of course, you're going to end up with a scarcity. There's a joke in the water business that says that water flows artificially uphill to votes rather than downhill to money. So one of the things, well, there's a couple of things about the Colorado that are interesting. The Colorado River was apportioned politically in the 1920s, and they apportioned it based on an Army Corps of Engineer flow study that was done unbeknownst to the Corps during a period of time when the Colorado River was unusually robust. In other words, the flows that they measured were historically high flows, which they assumed were normalized. So by now, we've allocated about 120% of the production of the river, which is kind of hard on the river. And now we're moving into a period from historically high flows to historically low flows, which is to say the river itself is generating about 40% less surplus water than it did at that point in time. At the same time that we do that, rather than pricing water to reflect its use, rather than letting urban users compete against rural users, letting industry compete against somebody else, in other words, allowing a rationing of water by price, we allocate the water politically. So we use 2 million acre feet a year in the Imperial Valley of California for agriculture. We grow tons of alfalfa, which we put in shipping containers and send to China. We grow rice in the desert. I mean, we do all of these absurd things because there's no market in water. Now, maybe one of the reasons why food is so cheap is because water is so cheap. In other words, by subsidizing water, we're subsidizing food and we're subsidizing families' household budgets. But you have a circumstance now where Lake Mead, which is the most important source of water for several Western states, has water levels that are below the intake level, which is to say the drain, the drain is exposed. The water level is below the drain. This is an interesting circumstance, and it isn't one that resolves itself neatly or quickly. And just parenthetically, I think the decision not to move to Phoenix might have been a wise one. I realize there are days like today. I don't know if the weather in Seattle is as drizzly as it is up here. There are days when you and I suffer from too much water, but that's probably overall a benefit.
Yeah.
Remember too, taxation in the state of Washington relative to the state of Arizona. They leave you more money to spend on water up here than they leave folks in Arizona, which is a good thing.
Yeah, for sure. That's kind of been like, there's trade-offs, like Thomas Sowell, said,
There is.
there's no solution, there's trade-offs.
That's right.
Because, politically, like with, our governor and all of that, like there's times where it's like, I think want to move, I want to get out of Washington, and there's definitely some benefits for being up here. So just to kind of wrap us up, this is like the biggest concern for I think a lot of my audience as well as myself, it may just be myself, but so we have these huge budget deficits. We have over, I think it's over 100 trillion off balance sheet liabilities. Pension crisis looks inevitable. I've heard you talk about boomers spending the children's future. And I also heard you talk about like the importance of like cash, gold and all those things. I'm just wondering like how does my generation think about retirement, protecting our wealth, and securing our kids' future?
First of all, don't assume anybody else is going to do it for you.
Yeah.
We've had this promise in the United States for the last 100 years. It's a lie, which is to say that Big Daddy is going to kiss everything and make it better. Daddy's out of kisses. At the point in time, as an example, where Social Security came in the Roosevelt era, Social Security provided a family with poverty level subsistence from age 65. The average life expectancy of an American male was 66. So they promised to maintain you as a very poor person for the last 1 year of your life. Social Security now can kick in at age 62, and the average life expectancy of an American male is 86 years. Think about the arithmetic behind that. At the point in time when those promises were made, aggregate government debt on balance sheet and off balance sheet was about 10% of GDP. Now, if you look at just the on balance sheet liabilities of the United States, it exceeds the annual GDP. If you look at the on balance sheet liabilities and the off balance sheet liabilities of the United States, we're 5 times GDP. So we went from less than 10% of GDP to 5 times GDP. Suffice it to say that the same way that the Colorado River was over allocated, the carrying capability of the US economy has been over allocated too. So to the extent that people your age believe that society is going to solve their problems, they need to give their head a shakes. It isn't going to happen. My generation already spent your generation's wealth. It's gone. We voted ourselves all kinds of cool benefits, Medicaid, Medicare, parks, all this good stuff. I'm not saying if it's bad, but we spent it. It's gone. How do we cure this? You look at entitlements and you start making hard cuts. The idea, as an example, that Social Security would pay somebody like me, yes, I paid into it, all that kind of stuff. You got to say too bad, so sad. You got to means test it. We can't afford all the claims on the purse. And when people get cut out of their claims, they're going to say and they're going to feel it's unfair. Right, correct, absolutely, it's unfair. Next, for your generation, you have to understand that the circumstance that you're coming into, given your belief system, given your belief that the government exists for everybody and the country exists for everybody, and we're all going to help each other. It's all bullshit. You're going to have to help yourself, and you're going to have to lower your standard of living. You're going to have to save. If you like Starbucks, so what? You're not going to be paying $3.50 for a cup of coffee or $5 for some coffee beverage that I can't pronounce. You're going to buy a 10-pound bag of Seattle's Best, brew your coffee at home. You might really want a flashy car, it might be an important part of your self-image. So what? Your chore is going to get to get from point A to point B so that your savings last you the rest of your life. In addition to working, your money's going to have to work for you. You're going to have to be a capitalist. And if you don't have any capital, you can't be a capitalist. So at a very minimum, 10% of every paycheck pre-tax, 10% of every paycheck pre-tax, one more time, 10% of every paycheck pre-tax has to get taken aside. You got to pay yourself first. You got to save and invest that. Not next week. You could have a Starbucks, You could have any of those things, provided that you took 10% pre-tax and you set it aside. You can have a fancy car if you don't have to borrow money for that fancy car. But the idea that you go out and buy yourself a $70,000, $80,000 Tesla, whatever they are, and you borrow $50,000 or $60,000 of that, and the car is worth $10,000 less the second you drive it off the lot, and you're paying an interest charge on that. In terms of your future, that's insane. Now, a lot of people confuse what they want with what they can have. And they confuse what they want with what they can have because the promise of America has always been, if you don't look after yourself, that's okay. We're going to look after you ourselves. And that's a lie. It's a Republican lie. It's a Democratic lie, but it's a lie. The one that's going to look after Daryl Thomas is going to be Daryl Thomas. And he's going to have to be up to it.
Yeah, that's very powerful. That's a lot of what I've been focusing on with my family. We started getting chickens and planting some stuff, and I've been making sure to buy more gold. I think I probably have too much gold right now, Rick. I don't know. I don't know if I have too much or what.
You may, but that's better than not enough.
Yeah.
I've had periods of time in my life there when I had a lot of money, and I had periods of time in my life when I had no money. And you know what? I was happier when I had too much. I wasn't happier when I had not enough. So if you're going to err on one side or another, and I'm not saying that all of your savings should be in gold. All I'm saying is that most of your listeners probably need to have a much higher level of savings than they have.
Yeah, that's powerful. Well, Rick, thank you for that wisdom and just all the knowledge that you brought to us today, and appreciate you for coming on. We got to do this again sometime. I know you're busy and everything.
No, I'm not that busy. I'm ostensibly retired. I think and I should tell this to your audience. In retirement, I'm starting a bank. So stay tuned. If you don't feel you're well treated by the bank that you're at, I'm going to be here with an alternative sometime the end of the year. So when I tell you to save, maybe there's a little bit of self-interest in my telling you to save with my bank. But I look forward to coming back on your show. As I say, you giving me the opportunity to address your audience gives me the ability to say thank you to the folks who mentored me when I was a kid. And I really appreciate it.
Yes. And just about your bank. I know y'all still working stuff out or whatnot. I was thinking about that the other day. I was like, okay, I don't like my bank. Rick Rule's starting to bring a bank at some point. I was just kind of thinking about it. As long as y'all got bail-ins, I'm there.
20-something years ago now, I backed a group of what were at the time fairly young people. They're no longer young. And they started a bank called Everbank, an online bank with no bricks, no mortar, nothing like that. Just an internet bank. And they grew that bank to about $28 billion in assets under management and sold it. Good for all concerned. Early investors got a 30-bagger. Customers got higher deposits, all that kind of stuff. Very efficient bank. And then the guys that bought it, they've done a good job with the platform. But the things that were unique about that bank, particularly their precious metals and foreign currency products, just kind of got ignored. And the customers of Everbank started emailing us and saying, we're orphans, you've abandoned us. And the entrepreneur in me sees this great big market out there that isn't being addressed. And so, we've decided to address it. I look at these big banks and, they're really smart people that run them. But I wonder if they're smart enough to run $100 trillion derivative books. I know I'm not. So, in our bank, you're not going to see a great big speculative derivatives book. And you're not going to see us make loans on collateral that we don't understand to big companies who have so much debt that they may not be able to repay us. I just, I don't have any interest in doing that, So we're going to do things like make loans against people's holdings of physical precious metals, security that we do understand, liquid security. But we're not going to have brick and mortar branches. So we're going to be able to pay deposit interest rates that are in the top decile of deposit interest rates that are paid across the country. Old-fashioned bank, Daryl, that one, one that has like money in it, as opposed to various little pieces of paper. So as you can tell, I'm pretty excited about this. We did it before. They did it before with my backing. They're going to do it again with my backing, and I'm really excited about it.
Yeah, keep me in the loop about that, man. I'm excited about that.
Good. We will. Any of your listeners who care about anything I've said today, of course, can always go to my website, ruleinvestmentmedia.com. If you own natural resource stocks, list the stocks at that site, and I'll rank them for you for free, 1 to 10, 1 being best, 10 being worst. And if you care about my bank, if you want more information when the government lets us have a bank, in the comment section, just write bank, and we'll keep you on the list for, well, I was going to say a new kind of bank, actually an old kind of bank, a bank that just does banking.
Mm-hmm. Yeah, thank you, Rick. I appreciate that a lot. You take care, man.
Thanks, and have me back. I look forward to it.